Hi and welcome to another edition of GTP TV. My name is Tracey Richardson and today I want to discuss the ins and outs of fringe benefits as applied to motor vehicles inside your business. So primarily this impacts upon our clients that are either regarded to be employees or directors of their business structures, and where they get to drive a car that may have a private component to it. So the philosophy is, in this particular instance, they are receiving a benefit in lieu of being paid a wage, which would normally have tax taken out of it. So the tax office is just trying to claw back a little bit of tax if they possibly can. The private definition of a car is basically comes down to where it is garaged overnight. So if you can argue that your vehicle is garaged at the business premises, which is separate from where you live, then you can argue it is 100% business and none of the rest that I have to say is applicable to you. Outside of this, we can then use two formulas to determine the private component use of your car. So ideally, we would encourage clients initially to record a logbook with ideally more than a 50% business use. If this is the case for you, what we then require from you is a copy of your logbook confirming your business percentage, and then the GST inclusive costs of your registration, your insurance and repairs and maintenance for the last 12 months. And then if you can also confirm your speedo reading as at the 31st of March, this will then enable us to determine how many kilometres you've actually travelled for the last 12 months, which will then enable us to determine the fuel that we can attribute to your vehicle for that 12-month period. Outside of this, we do have some clients that do have cars that are primarily private in their business. So this then requires us to use a secondary formula. And it's fine initially for new vehicles because they do actually then get to claim quite a decent amount of expenses in their business, which will exceed the private component. But you just need to be wary that as your car gets older, the deductions you can claim in your business structure will diminish, and we quite often find that the private component then does tend to exceed the deductions you're claiming in your business. So just something to be wary of. So for these clients that fall into this category, what we only then require from them is just your speedo reading as at the 31st of March. My hot tip for both logbook and non-logbook users alike is to just advise us of any motor vehicle expenses that are being paid for personally or outside of the business bank account, as this will help to reduce the private component that we need to put through your books. So thank you for listening. Please stay tuned for my upcoming second YouTube clip on maximising your motor vehicle expenses via a logbook. Thank you.